Hello and welcome. I'm Andy North. I am the Chief Marketing Officer here at TaxCalc. Welcome to today's panel discussion, in which we are going to be looking at MTD and your client strategy. Specifically, we want to look at how different clients might present different challenges and how you might want to take action now so that you can limit any disruption that might cause. It's a topic that we touched on in a recent webinar that we did, and we had a lot of questions on this. So it's something that we wanted to delve into much deeper. So to do that, we're lucky enough to be joined by the wonderful Rebecca Benneyworth, who is probably the best known tax lecturer on the circuit and a veteran of over 30 years in accounting, and also an advisor to the government and to HMRC. She probably needs no introduction. Well done, Rebecca. Good to see you. Stephen Paul is also with us. He's the owner of the award-winning Valued Accountants in Consett, County Durham. Long-time friend of TaxCalc and one of the first accountants to test some of our MTD solutions. So we wanted to have him come along. And also Dean Shepherd is the Director of Compliance here at TaxCalc. Dean previously ran his own practice before diving into the world of technology, and he currently is our MTD aficionado, guru and nerd. Thanks, Dean.
Thank you, Andy.
Few bits of housekeeping before we start. The session will be recorded and it will be distributed, so you will get a copy of this immediately after the show. Any questions, please do put them into the Q&A slot. We have a limited time for questions at the end. We will try and get to as many as we can. And if you do want to chat among yourselves, there is the chat panel, but that will not be monitored by us, so we won't be party to that. We'll see that at the end, though. So before we get started, I think we're going to have to address what happened yesterday. I don't know if you were aware, but there was an announcement was made. And just to summarize that, I'm going to hand you over to Dean.
Thank you, Andy. Well, that was incredible timing, really, putting this webinar in advance, knowing that ministerial statement was going to happen yesterday. So if you have been buried within your practice and weren't aware of the announcement that was made yesterday by our incoming Financial Secretary to the Treasury, there has been a further delay to the Making Tax Digital programme. So for individuals, the start date was, of course, April 23. That's now going to push back to April 24. For partnerships, it's in fact going to go back a further year, so they won't be brought into MTD until April 25. And also the full and perhaps final, perhaps not, MTD regulations were also released yesterday, which gave us an opportunity to pore over some of that finer detail. And within those regulations was, in my opinion, a little bit of basis period reform by the back door, which perhaps means that this 1 year pushback or delay isn't quite the call to forget about MTD. Things are still going to happen pretty quickly, and I think Rebecca's probably got a few words to say on that one.
Wow, this is it. The discussion that a lot of people I've been speaking to has been, this is great, I've got another year, I can forget all about it. But Rebecca, you had some comments on exactly that point.
Yeah, Andy, I'm just going to share my screen. So I've done some timelines just to let people know what actually is going to happen. Okay, right. So let me just talk about what we thought and what we've now got. So since we got the consultation documents way back in 2016, our understanding, and this was very widespread, was that people would come in relation to their accounting dates. So that although we were thinking about an April 23 start date, what we expected is that if your client year end was the 30th of June, they would come in on the 1st of July 23 and start filing 3 months after that. If your year end was, for example, the 31st of March, they would not come in until the 1st of April 2024. That was a very, very widespread understanding. Now, what reading the regs has told us is that actually that isn't going to be what happens. So without that delay, so at the bottom of the slide, you can see we had 18 months to get everyone with a 5th of April year end onto digital records with a 23 start date, and we had 30 months to get everyone on with a 31st of March year end, and in between for in between. Without the delay that was announced yesterday, this is what happened. Watch that blue box. That goes a year shorter, because what we found out yesterday in the regs is that everybody will go in a big bang on the 6th of April. Now, if that was the 6th of April 2023, you've just lost a year. From what you thought you had, you've lost 12 months. And you've got 18 months to get every single client stood up on digital records and them all to jump in on the same day. And that was the bit that was a scary, scary element, because that actually isn't what I know, isn't what people are expecting. It's not what I was expecting. And I've been working with HMRC over the last 3 months or so, looking at that, looking at the idea that everyone's coming in on the 6th of April and exploring the impact of that on practices. And what we've got, you're back to 30 months. So what I said to somebody early this morning is, you haven't got another year. For a lot of clients, you've got another 5 days. And that, I think, is a message that won't actually percolate for quite a while, because people are thinking, you know, it's been kicked down the road for another year. And actually, you know, what you've got to focus on is you've got to get everybody ready at the same time, and everybody is going to jump in day one. So for every single client, you will be filing that first quarter at the same time. I'm calling it a big bang. I know HMRC are very keen on big bang, but what I've said to them is, look, we've got to have some communication so that agents understand that this is actually a very different picture from what you were expecting. So, so that's my little message for you, which is mixed news, I think.
I think it's crucial that this gets out, because I spoke to probably half a dozen of our customers yesterday, and unanimously their response was that we've got another year and we're going to be very happy about that. So thank you very much for sharing that. I mean, Stephen, what was your take when you heard the news?
Yeah, I'll be brutally honest. I read the blog, I got the newsletters, and I thought it's been kicked down the road for 12 months. We've got an extra 12 months to sort this problem out. In reality, it's when you look at the detail, when you hear experts like Rebecca telling us the time frame, we've still got as big a problem today as what we had yesterday. We've still got exactly the same issues that we need to address.
It's terrifying, isn't it? So this could, in fact, have made things worse, because people will be assuming that they've got a lot more time and not. So we need to get that out. So Dean, we're going to run a small, quick poll just to get people's impressions of how they are going to be handling this.
So I guess in light of the delay, whether it is a delay or not, how are people feeling? Is this going to affect their planning towards implementation? And we've got a number of options there for people to report their initial thoughts if they've only just heard this news, or if they've had an evening to sleep on it. Are they going to press on as planned? Are they going to take a breather, pick up on it after next tax season, perhaps in February, March? Are they just going to forget about it for another year? Or, you know, this is delay number three now. Is it really going to happen? Maybe not. Anybody thinking it's not going to happen ever?
I'm thinking about running a sweepstake on that. Come up, cash.
So we've got lots of responses coming in. They're starting to slow down. Not many thinking it's not ever going to happen, Andy. I can see your vote in there. Okay, let's share the results of that and see what people are thinking right now. Okay, so there's quite a lot of people there that are going to press on as planned. It is a bit of breathing space, but perhaps what Rebecca just showed us, that would be a little bit of a shocker for some people, that it's not quite the delay for every one of their clients that they perhaps first thought. But also lots of people picking it up after tax season, which is a 6-month breather. I suppose that's still quite a sensible approach to take. But low percentage of people forgetting about it completely or thinking it's never going to happen. So I think lots of smart people on the webinar today, I think, Andy.
It looks like it. It looks like it. And it should be clear, I'm not an MTD skeptic. I don't want that to be a takeaway from today's session. But so the focus of today's session is really to start looking at clients and starting to think which ones are going to be more challenging, which ones are you going to separate, how are you going to separate those out, and what are you going to do with them once you've done that. Before we do that, very, very quickly, Dane, could you just give us a very quick run through of who is going to be affected and what the obligations are?
Yeah, sure, Andy. Now, because I've kind of reeled this explanation off time and time again, I've got to remind myself it's not 23, it's 24. But essentially, when we're looking at the clients affected, we're looking just at individuals now from the outset in 2024. Partnerships has been pushed back to 25. Companies even later, so don't worry about your companies, don't worry about your trusts, estates, pension schemes, anything, charities, anything kind of quirky like that. We're just looking at individuals now, so sole traders and people with any property income, because as far as HMRC are concerned, it's business income, and it's property landlords are a property business, so they're included. In terms of obligations, the main one obviously is the requirement to keep records digitally, report them quarterly, and that's a summary of the income and expenditure, not the full transactional details that HMRC will have, and the end of year requirement. So an end of period statement for your accounts, your property income, which essentially is the equivalent of the supplementary pages we have on the tax return today, together with what is in effect an end of year tax return, albeit that it's just information being sent to HMRC digitally, not the completion of a physical form as we have today.
Great, thanks for the recap. I'm sure not many people have entirely forgotten that, but it's useful to start from somewhere. So this is the point of this discussion. Stephen and Rebecca, and you at home, if you're sitting there thinking, at least some of my clients are really going to struggle and they're going to cause me pain. First of all, let's think about what kind of frameworks, what kind of options have you got for separating your clients out into different groups? What are you guys doing?
Okay, so in my practice, my clients are all very, very small, and I think I can confidently say they are not very IT experienced or IT confident. And I go downwards from not very confident to absolutely hopeless. So what I need to do is to start thinking about where I need to devote my efforts. Obviously, I have to get everybody onto digital records and ready to go now by the end of March 24. Now, actually, I'm going to have a whole bunch of them ready a long time before that, because I want to get in the pilot. I want to find out how it works. I want to find out what you have to do, what you can see, what you can do, all the rest of it. So I think, Andy, the answer broadly is sorting them into who's already on software, because I've started this journey quite some time ago. Lots of people listening will know that I've been involved with the MTD project since it was invented. In fact, since before it was invented, when it was called Making Tax Simpler, and then they decided to make tax digital. So who's already on software? And there might be subgroups of that. Who's already on software and I can leave them to it, and who's already on software and actually needs a bit of sorting out, and isn't really hacking it. And then it's who's not on software. And that's going to fall into more than one pot as well, because there'll be the people that I can get on software and that I know it'll be okay. It might mean bringing the bookkeeping in-house, but it'll be okay. The fee is enough to support a license and all the rest of it. And then there are the also-rans who aren't on software, who don't make very much money, who can't really afford to pay anymore, and I don't know what I'm going to do about them. And that's going to include some individual landlords as well. So that's sort of a little bit about my segment. I expect Stephen's isn't probably a lot different, really.
Yeah, Stephen, what's your approach?
Yeah, mine's similar in certain respects. We've got a lot of sole traders, a lot of limited companies. Obviously, limited companies is way down the road here. But from a sole trader point of view, a lot of ours are already on Xero. We use Xero, we use Dext. We're comfortable with those. But we have got some legacy ones that still are using the manual records. Pretty much the same system that Rebecca's got or talking about here, whereby we're going to look at the ones that we can convert onto digital records now. We are going to get them onto digital records straight away. We do not want to kick it down the road at valued until February next year. We want to start doing it now, because when we're having the discussions with the clients that typically bring the stuff in January next year, we want to say, you can't do this anymore. We need this in earlier. This is your chance now to get it on digital. We've got this year, this December, let's say, and we've got next December. We've got 2 bites of the cherry to get them across the line for us. We've got to make sure that we train every single client to use the systems, to use the software. If we can't do that, we're forced to bring all that bookkeeping in-house. Does that mean that we've got to employ 4 times as many people if we've got all of these returns to submit? That's not what I want for my business. It's not what I want for my practice. I would like to get the clients doing more of that data entry. So we've got to train them to do that. The problem that we've then got is some clients won't want to do it themselves. We will be forced to bring some in. And I believe we'll create an outsourced bookkeeping department just for this purpose, to be brutally honest. But I also think we're going to have the legacy clients that actually can't afford the service. What do we do with these people? And I think,
well, we're going to come on to that exact question later on about what we do with them. It sounds as if, I mean, both of your approaches are really looking at the technology and using that as a determiner of which direction you want these guys to go in. Dean, you had some other input from some of our customers as well. What have you been hearing that people are doing?
Yeah, I think a lot of the customers I've been speaking to have been trying to really nail down exactly which of their clients are affected and at what point, and how much are affected. So really identifying which clients it's going to be the biggest upheaval for, and for those that have a little bit of work to do, and perhaps a good chunk of the client base that are already MTD ready, so they're already using online bookkeeping application, they already keep their records pretty well and up to date, and importantly, you have an ongoing relationship with them, so you're already dealing with that client every month or every quarter. So it's not a really big change in the nature of the relationship that you have with them. I mean, we've talked about it before, Andy. You know, I'm a big fan of segmentation and being able to pull that information out using technology rather than just kind of guessing how many clients of mine are on the various different bookkeeping applications, for example. I know certainly in my practice, we'd use our database for pulling out that information. For TaxCalc customers that we've got amongst us today, then you can do that within Practice Manager. You can create custom fields within there, so you can do something really simple like tag up your clients as being MTD ready, nearly ready, or not a hope in hell. And then you can just run a report and start working on those ones that are going to be more difficult than others. You know, probably too much to go through in a webinar today, but maybe I can do like a bite-sized video on what can be done in the software to assist with segmentation.
Dean Shepherd, a big fan of the bite-sized video, one of his specialities. So if we have a framework. Are we just looking really at the technology? I mean, what other factors would you guys want to rolling into that? Is there anything else, or really just keep it to the technology and their use of technology?
I think, Andy, I am bringing in other things because, yes, the use of technology is important. And actually, probably I ought to here just say a little word about spreadsheets, because there'll be lots of people listening who use spreadsheets for their clients. We don't use spreadsheets in my practice. That's because my clients can't use spreadsheets. My clients, probably none of them know what spreadsheets are, to be honest. In a way, that makes it easier for me because I'm going straight from manual. So let me just grab. There you go, there's some records, duplicate book. Okay, so I'm going straight from that onto software. And for the person who uses this duplicate book, she won't be doing it herself because that's the limit of her technology. So that's fine. We're staffed up to do it. Stephen said that isn't what he wants to do. With the client base I've got, it's what we do. So that's absolutely fine. But I think what else I need to pull in? I need to pull in what is their current fee and how much am I going to have to charge them to get them on some software and for us to do the books. And, you know, by the time somebody's opened the software, that's a charge. So I think the fee is important. I think the other thing that's quite important, Andy, and I think people will start to get their heads around as we go forward is, you know, if you've got a client, so here's a really simple example, husband and wife, self-employed, a jointly owned property and one property owned by the wife. So I've got quite a complicated picture of record keeping. They are tiny businesses. They are semi-retired. So they've got a state pension and they're living on bits and bobs from what he does and what she does and a bit of rent. But actually now I've got to think about how many licenses am I going to need? I'm going to need one for each trade. And then am I going to be able to cope with one more for the property income? Or am I going to have two because each of them have got property income? There's no doubt they'll be over the 10 grand on, you know, by adding in the turnover. I don't know. At the moment, I don't really know. I don't know what my software provider is going to give me. Are they going to give me the facility to peel apart? And anyone with farmers, this is a big deal because you've got something that's a farm. It's under one VAT number. You've got them on one piece of software at the moment. You're running your VAT returns, happy days. Come MTD, what you may find is you've got 3 separate trades and 2 property businesses, an ordinary rent and a furnished holiday let. And how are you going to bust that lot apart while still keeping the VAT integrity? And I will say, Andy, this is a conversation I was having with someone from HMRC this morning. I mean, part of it's going to be down to what your software provides, but some of it's going to be down to what HMRC specs up, really. So I'm going a bit wider than can they use technology, because actually in my practice that's easy. It's no they can't. So can they afford to pay me to do it for them, or is there another solution?
So you've got to bring all of those factors in together. So do we end up with, and this is something that I think some of our customers have talked about, you effectively get 3 groups. You get a keep, you get ones that you can change, and the ones that you want to throw away. Is that where you see yourself being able to get to? Is that what you want to get to?
It's hard because actually the ones on really, really low fees, a couple of them I've had for over 30 years, and they make peanuts, and I can't charge them anymore. And the only reason I've still got them is because I've got my arm around them and I'm saying there, don't worry. It's not very commercial. And, you know, actually, we sat down before I knew about the delay. We sat down in my practice, my practice manager, and we started working out, okay, what are we going to have to charge and what's their fee now? Oh, God, don't like the look of that. And we realized that, you know, we're going to be losing money. We're going to be paying to service these clients. Now, actually, no, I'm not going to use my old age pension to pay to service clients by paying for their software for them. But do you know what? It's going to be really hard to kick them out, really, really hard. And I think the key to that for us is letting them know early and then giving them the option. They're either going to have to stump up or they're going to have to go and do it themselves. But at least if I can give them at least 18 months notice, then they've got time to think about that. And do you know what? Some of them will jack it in. Some of them will pack up because they're my age and, you know, ready to stop.
And what about you, Stephen? Are you similarly aiming? Are you looking to get to the 3 groups, quite hard nosed about it, or what's your approach?
I would love to be hard nosed about it. I would very similar to Rebecca there. I would love to be hard nosed and just say, yes, we've got the clients that are already MTD ready. We've got the clients that we can move on to MTD. But what about the other group? What about the group that not quite 30 years, but some of the clients I've been dealing with for 20 odd years, and they're paying a couple of £100. It's going to cost more than a couple of £100 for the software. What do I want to do with these people? I feel like I've got a duty of care. I think we as a profession have a duty of care with some of these people. What are they going to end up doing? They're going to end up going to backstreet accountants. I heard a nightmare story the other week where it was, I would just submit any old figures, rough figures for the 4 quarters and then wrap it up at the year end. No, you can't do that. You can't do things like that. But there will be people out there that will let clients do that. I don't want my clients to go anywhere like that. Yeah, and the bit that's really, really important to me is I'm going to have to find a firm that can do it cheaper than what we can for some legacy clients, I believe, for some of these clients, because I want to pass them to somebody that's going to look after them instead of just casting them aside. No matter what time frame I'm giving them, I want to give them as much notice as possible. The other thing for me that I see is a huge, huge challenge is we are seeing so many new software providers coming out these days. One of my team met up with a firm yesterday. I'll not name them, but they're paying accountants £1,000 per referral that signs up with them. I was like, whoa, really? Up to a maximum of £20,000, £1,000 referral fee for every client that signs up with this software company. I was like, right, let's have a look at it. Issues were the client can raise a sales invoice. The accountant can't raise a sales invoice. That doesn't work for doing bookkeeping for the client. The client has their own login. Every single person within our organization needs their own login. How does this work from a control point of view? It doesn't work. You've got other banks. Our bank was stalling. Every time I make a payment on my personal account, it asks me to allocate it to a category. I can sort of see further down the road that this might become some sort of MTD product. I don't know whether it will with stalling, but I can see other people getting in that market that will have the link up that clients will go, well, I don't need you to do that anymore. I can do it through my bank. I can do it through this other bit of software. We need genuine software that works. Us as a profession have so much experience of using software for the last 10, 15, 20 years. We've got to make sure that the software that our clients are using is right. And at the same time, we've got to make sure that we are training them right to do their bookkeeping, to do their reports so that they are MTD compliant. We don't want to get it where there's an issue for them.
Sorry, Dean, we had some conversations about some of the new software that's coming available. Obviously, a lot of do-it-yourself type software. What's your take on that?
That's a good question, Andy. I mean, there have been lots of new entrants to the software market, and it's a good point that Stephen brings up about the banks, because we have had some questions come in today asking about whether it's advantageous to be getting everybody that's either got a sole trade business or particularly property business. Do we get those clients to use a separate bank account to record all those transactions? And I think that was always good practice, regardless of when MTD is going to come in. But I think as far as software goes, there's certainly going to be new entrants to the market, new products available that will hopefully make that process much easier if all the transactions are going through a separate business bank account, and we can connect to that data, pull it in, and categorize it, and hopefully have the technology to do more of the work than your team back in the office.
So I think the key point is that we need to start thinking about this now. There's no way, if you leave it until we get much closer, you're going to have some nasty conversations with your clients. So let's have a quick look. If we take the poll, we wanted to just get a read of everyone's thoughts on how they're going to start segmenting their client base.
Yeah, we've got a couple of polls we can run around this topic, Andy. The first one, as you say, is about the segmentation aspect. I guess it's a bit marmite when I speak to practices. Some are really into it, like me, and will use their CRM systems or database to tag their clients and be able to run off reports of exactly which of their clients are in what position. Other people will record that information, but in the trusty old Excel spreadsheet. Other people will have a dedicated practice management tool or CRM tool to do it for them. I guess some people will be looking at those technology solutions now. I know people I've spoken to have said that they didn't feel a practice management solution was right for the practice now, but with the advent of MTD and the myriad of filing deadlines that they're going to face when that comes into effect, they'll need something a bit more dedicated to track that for them. Although I'm sure there'll be some people on the call who are itching to see my bite-sized video on what can be done within our suite. Let's have a look at the results on that one. Okay, if we share those. So a broad mix there, I would say. Quite encouraging, actually. Only 11% are saying that they're just going to go by gut feel. You know, good old Excel list is always very popular.
Your video didn't show up too well, though, did it?
That is somewhat disappointing, Andy. 7%
please someone watch Dean's
to watch
video.
my bite-sized video. Yes. What can I say? But with the huge numbers of people on the call, 7% is still a reasonable amount of people, I'm sure.
Right. Thank you very much for that. So we've got to the point, if we've reduced down our groups, we're going to inevitably identify the ones that you want to change and the ones that you want to effectively you're not going to be able to be working with. So Stephen, you were talking about this earlier, about how do you start to have those conversations and what kind of solutions can you offer those people that you probably don't want to work with. How are you thinking that you're going to approach that?
Yeah, I think the first thing that we've done is we've got a task force within Valued where we've opened it up to every team member and said, do you want to be part of the MTD task force? We want to encourage every single person within the business to get involved that wants to be involved. We don't just want it to be my opinion and the senior team's opinion. It's got to be every single person because it's that big for us as an organization. But what we want to do is when we've got the lists, which we've now got, we need to go to the clients. We need to communicate what MTD is about. I think things like yesterday's announcement won't help because clients that will also take the perception it's been kicked down the road for another 12 months. It hasn't. So we need to educate them on what the latest announcements mean, but also we need to say to them, right, this is what it means from a price point of view. This is what it means from you doing your bookkeeping point of view. This is what it's going to be involved. We've then got to take that step back and we've got to see whether the client wants to do it themselves or whether they want us to do it. If they want us to do it, we're going to have to devise a department, in my view, just to do this type of work. We've got some bookkeeping clients already, but I think that will need to grow quite significantly. So we'll form it into its own department. The other clients may say, right, we'll do it ourselves, no problem, but we've got to train you on how to do it. We cannot be checking every single thing and updating every single error that you make. We've got to be confident in what you're doing. We've got to make sure that we're looking at it, and if there's problems, we've got time to fix it, especially if the deadlines are as tight as what they are. We haven't got time to go and fix every single client's data every single quarter. The other option is some clients may just say, it's not for me, I can't do anything. I think some clients will retire, is my honest opinion. I think Rebecca alluded to that before. But I also think that some clients will say, I can't afford the extra work. I don't really want to do the bookkeeping myself, and I can't afford your fees. At that stage, I feel that I will have some conversations with some smaller accountancy firms, shall we say, who could be better placed to look after those clients. The issue that we've got, as we say, we've been dealing with them for 20 odd years. Some of them, we don't want to just cast them aside. We want to make sure that they're looked after. And that's the part that's really, really important to me, is making sure that if we can't look after that client, we pass them on to somebody that can. But similar to Rebecca, I don't want to be spending my money, my firm's money, on servicing clients that actually were making nothing on at all.
Yeah,
that doesn't make
so
any
this is the
sense
importance
whatsoever.
of working on it now, is that you can soften that blow, give them a chance to find somewhere else, and also if you want to find other bookkeepers that you can pass them on to, you can sanity check and verify that they're going to do the job.
Yeah. The other option that we've obviously got is spreadsheets as well. So spreadsheets we can still use. However, let's be honest, as myself, Rebecca, every accountant that's watching this, we've all got different spreadsheets. Fundamentally, they're roughly the same, but they're all different, whether it's dates along the top or whichever format it's in. If we are using spreadsheets, the message that has been given to my team from me is we must use exactly the same spreadsheet on every client, regardless. No customization on it. It must be the spreadsheet. And the way that we're going to do that is, my understanding is that TaxCalc are going to be able to provide a spreadsheet that would work. We will use that spreadsheet. No if, buts, and maybes. It will be that one. We will not give the clients the option of creating any spreadsheets, and we won't give the team the option of creating spreadsheets, because we've got to get the accurate data.
It's the accuracy and that control for the efficiency. So thanks for that, Rebecca. What's your approach? I know we've talked a lot about how you can use psychology to maybe prompt your clients to work in a different way.
Yeah, I've tried it, Andy. I've tried it. Trust me.
How did it go?
Yeah, we are engineered a bit differently to Stephen, and I'll come on to that. But just as an illustration of where I am now, having got a lot of my clients already on software, I am in a very, very different place to where we were. And as I've said, I've been going for over 30 years. And I just hated December and January, absolutely hated it. Because I was busy lecturing in the autumn, I didn't have time to pressure my clients enough. And so every December, January was an absolute flipping nightmare. So 10 years ago it was, I was diagnosed with breast cancer. I was diagnosed with breast cancer on the 28th of March. And my mind turned to self-assessment. Well, you know, you've got to think of something else other than what's about to happen to you. And I thought, I'd been told that I was going to have the full lot. I had to have chemo, I had to have surgery, I had to have radiotherapy. And I was told, basically, you probably need to write off a whole year. My cancer had spread, so I needed, and my doctor said, you're probably only going to have one shot at this, so you better make it a good shot. So I thought, right, and I wrote to all my clients about mid-April to say, you know, usual thing, but to say, listen, everybody, I've got really bad news. I've got advanced breast cancer, but I'm going to be all right. But what I need is for you all to bring your records in over the summer, so that while I'm having horrible chemotherapy, I can have a day here or a few hours there and get it all done. And I had visions of it just gently pottering along. At the time, I didn't have anywhere near as many clients as I've got now. Do you know, Andy, not one, absolutely zero clients brought their books in early. None. 2 sent me flowers. None of them brought their books in early. So I had an absolutely crappy December and January because I was exhausted after horrendous chemo and no hair. The radio absolutely wiped me out, and there I was trying to do all my bloody tax returns. And I will say, you know, part of the reason for getting my clients and starting this job early is I was absolutely determined I was not going to do January anymore. Now, all right, it took me a little while to decide to do it. I re-engineered my practice, but actually, apart from the ones who can't afford a license, my clients are on software. But what we did, I mean, Stephen's talked about spreadsheets. Here's my take on it. I've got rather little kids, and 3 of them now work for me, and I was doing it all myself. But what I figured out is if I get a reasonably simple package, and lots of people know I use QuickBooks, if I get a reasonably simple package, and we get bank feeds set up, because I think bank feeds are absolutely essential, then what I can do is I can get my youngest daughter to do the bookkeeping, and she's got her own business and works from home, and essentially we run it all sort of like out of spare bedrooms because they all do it when it suits them. They're job structured, so she's 21, but she knows which client she's got. She knows every quarter these clients have to have a bank rec. Some of them have to have a bank rec once a month. And she's doing it on the software. If I had her keying into spreadsheets, I'd be looking for mistakes because she's not an accountant. But by using technology, and I also use Dext as well, but by using technology, what I've done is I've created jobs that actually anyone can do. And do you know what, Andy? Round the corner from me, there's a primary school, and round the corner from that is a big housing estate. I'll bet you I could find a dozen people who could do bookkeeping for, I don't know, 10 hours a week, something like that, that fits around the kids or evenings or whatever. And actually, you know, I'm lucky I've been able to do that. A lot of you, like Stephen, have got office premises, you've got full-time staff and things like that. I'm taking clients on, and if I need to grow, I'll just go around the school and get my daughter to have a chat with a few of the mums and say, does anyone fancy a bit of part-time work?
I was going to say, just to be clear, you're not recruiting primary school children to do.
No, just their mums.
The mothers. It might work. It might work. So you've got to put these into play, and clearly things like telling your clients that you're ill or potentially trying to find them probably isn't going to work, because I know that's been mentioned. Yeah. One of the other concepts that I know, I mean, Dean and I were talking about is there are a number of more accounting techniques that you can use to potentially buy yourself some more time, or at least take people out of this in the short term. Dean, you're talking about certain mechanisms.
Yeah, I mean, incorporation's got to be the best, well, the obvious one there, Andy, because although nothing was specifically mentioned about MTD for corporation tax in the announcement yesterday, we do have it on good authority that what was previously announced, in that corporation tax wouldn't happen before April 26, it's very unlikely to be April 26. This will also fall back further. So incorporating clients would certainly remove that immediate need for them to fall within MTD, but of course there's a whole other raft of things to consider when incorporating a client. I was kind of drawn to the appointing a corporate partner within a partnership, because that was specifically excluded from the first tranche. Again, there are other things to consider there, and I think because partnerships has been pushed back a little further to 2025, it's probably not something I'd be considering right now, but does remain an option.
What about pricing? Because that's come up. Stephen, I think we were talking about this relatively recently, about how do you just jack your prices up? I mean, it's not the nicest way of doing it.
It's not. And let's be honest, we've all got those clients, pitter clients, pain in the clients, yeah, that in reality we shouldn't be working with. We don't really want to work with. The team don't want to work with. MTD should not be the excuse to get rid of these clients, but it is a good excuse to get rid of some of the clients. Let's be honest. You're going to have some clients that they're constantly bringing the stuff in on towards the end of January every single year. Do you find these clients? Do you charge them a premium if you bring it in that time? To be honest, I just think it's a case of you don't work with these clients. I think pricing has to come in, but I was always brought up a fair day's work for a fair day's pay. And I don't want to use pricing just to exclude clients. I know that some firms will do that. I don't have a major problem with it, but that's not what I would like to do in my practice. What I would like to do is make sure that we are completely clear with clients about what we are charging, why we're charging, the fee that we're charging. And I think the other side that is more important to me is I don't want the clients to think that actually it's just valued, that's putting the prices up for the sake of putting the prices up. It's got to be the communication about this is the extra work that's required. This is why we have to do it. I mentioned before, I've got some clients might be paying, I don't know, £300 a year. Now, software could cost £300 a year. That's before we even actually do any work on it.
It's going to be a significant change, isn't it?
Yeah. Do we double the fee? Do we triple the fee?
Rebecca, what about encouraging your clients to self-serve? Is that an option?
I think it will be for quite a lot of people listening. With the clients that I've got, it's not, because I'm not unpicking it. So the way we work is minimum, you've got to connect your bank. And I will say, Andy, you know, some clients, I have to send my bookkeeper out to their premises every 90 days because they actually can't even connect their bank to software. But, you know, we're geared up. She's got an electric car, so I don't care about shortage of petrol. Off she toddles, and it builds a relationship. You know, they're so grateful when she rolls up. Oh, thank you. I'm so stupid. I'm sorry. I can't do this. But builds a relationship. And yeah, all right. I'm not charging them £25 an hour for that. I'll charge them what her wages are because, you know, it's all part of it, comes out in the wash. But as a minimum, they've got to connect their bank and they've got to take a photo of their receipts. And if they and we have a little slogan: no photo, no claim. If they don't give me a photo of the receipt, I'm not claiming tax relief on it. I'm not in the business of making things up. So that's that. And then if they get a bit cleverer, because I would quite like them to, they can raise their sales invoices. Obviously, my pubs and cafes and stuff like that, we just give them a like a simplex book to put their takings in, and we key it in. But as far as possible, we are on auto feeds where we can, and then the client maybe doing their sales invoices, maybe not. I mean, I've got a builder who every invoice he raises is called number one. They never even have a client name in it. I mean, he's VAT registered. Every invoice is number one. Most of them don't have a date on. They don't have a customer name on, or they have John. And so, you know, actually, that's about where my practice is. But we're gradually moving. But self-serve, isn't it? But the way I'm going with pricing, Andy, with these people is I've gone right away now. As I've moved over, I've gone away from an annual fee. It's this much a month for your software. It's this much a month for your bookkeeping. It's going to be this much for a quarterly submission, which we'll do. It'll be this much for an end of year. It'll be this much for a tax return or final declaration of your other income. And then they know exactly what they're getting into. They can see how it's made up. And for some clients, to be frank, Andy, it's come out no more than what their annual fee was in the past. So, you know, I've got winners and losers, but some of them it is a big fat no-no. But I think pricing, I mean, at Pitter clients, Stephen mentioned, I'm fortunate. My practice is small. I've got another business. I haven't got any Pitter clients because they get something off. They get told. I get my daughter, who's quite strict, but I get her to say, right, okay, right, don't let me say this because otherwise I'm going to let rip. But I go, I need you to be diplomatic to get rid of this client, but basically get shot. And she does. So, you know, if they calls me aggro, they're out the door faster than their feet can touch.
So you use your daughter as a weapon.
Yeah.
That's good. That's good. Excellent. Well, look, I think what we're getting is the sense that we knew there were going to be no answers to this, but our intention was to get people to start thinking and start acting sooner rather than later. So before we get to the final poll, I'm interested in the questions. We're going to get to a few questions that come through, and I think we're going to come to the end. So the final poll.
Final poll.
Over to you, Dean.
Okay, let's launch this one. So we've talked through a number of these strategies with our panel. So this is a multiple choice one. Which of these will you be exploring or implementing in your practice? Incorporating as many sole traders or partnerships as you can. That was probably my preferred suggestion. Actively reducing the numbers of MTD clients on your book. So are you simply going to stop acting, I guess, for sole traders and focus more on companies? Make significant changes to your pricing model, including perhaps pricing some of those smaller clients out of the practice. Rethinking the definition of your ideal client there. If you are already specializing in a sector that's predominantly sole traders, small clients that are profitable for you now, will they still be profitable for you in a few years' time? Perhaps you need to rethink who your ideal client is, who you really want to be working with, and of course whether you are going to get some of your clients to self-serve their quarterly submissions under MTD, probably like some of your clients self-serve for VAT at the moment. So those responses are coming in thick and fast. Here's the numbers. Well, there's quite a standout one there, Andy.
There's significant changes in the pricing model. Yeah, it's certainly what we're hearing.
Yeah. Also self-serve, pretty popular there. Certainly my practice had quite a few clients that would do their own VAT returns, and I'd come in there just for the end of year stuff, and no doubt check over those VAT returns and advise them of any adjustments on the next one. I can see that working for many MTD clients as well. Fantastic.
Okay.
Sorry, it is just worth, on that note of self-serve, it is worth noting that there is, unlike VAT, there is no accuracy declaration on the quarterly submissions. So if you do get clients doing it themselves and they make a bit of a Horlicks of it, you haven't got a problem. It's just I don't want to be trying to sort that out at the end of the year. I'd rather have it clean and tidy so that now I'm bashing through accounts and getting tax returns out the door really regularly. But yes, if you get them to self-serve and they make a mess of it, it's not a problem. There's no fines, there's no compliance work, so that makes that certainly a viable option.
And you're going to need the tools to be able to do that, obviously. So, okay, so a few questions that have come in from the floor. Do you guys have any suggested text that you would use to announce MTD to your clients, and how are you communicating that?
In terms of us, I am a great believer of they've got to hear the valued voice. So we use videos quite a bit. We don't just want to send it out as a generic newsletter. Those clients that we've identified as a problem, we want to pick up the phone. We are picking up the phone to those clients, having discussions with them. We will then follow that up with a video. We'll then follow it up again with some training sessions with a revised quote, so that we want to guide each client through the journey. We don't just want to have a generic text that we send out to every client, because I feel if you send a generic text out to every client, they're not really going to get the message, would be my honest opinion. I think we've got to roll our sleeves up now because it's us that will have the problem come deadline day. If we don't, we'll end up with a big problem, or a bigger problem. I'd prefer to spread that out over the time period that we've got now.
Another interesting question that's come through was around new clients and particularly pricing. How are you addressing new clients now? Are you addressing them differently as the way that you would have done before MTD was a thing, before you were really aware of it?
Yeah, certainly, Andy, everyone I take on has got to go on software, and they've got to go on QuickBooks, because we're only a small firm. I'm not learning 43 different software packages. Absolutely not. So if they want to use free agent because they've got it free from their bank, they can go and find another accountant. And you know, I'm pretty hard-nosed about that, because I know I'll regret it down the road if I take on all comers. You know, my bookkeeper is not going to be good and quick and accurate if she's got to start thinking about, oh, how do you do this in this particular package? So any client I take on, if it's not a limited company, and I will say actually my limited companies, I'm just putting them straight into software. I'm going, this is the way we work. If you want us to be your accountants, this is what you have to do. Otherwise, I can recommend someone else. Interestingly, actually, I picked up a client last week, and she said, and I wasn't offended, she said, actually, you're about the 5th or 6th accountant I contacted. Nobody is taking anybody on in this area. And I didn't have a paddy that I was the 5th or 6th. I just said, fine, we're taking clients on, you know, long may it happen, because I haven't run out of kids yet, so I can still take a few more on. So
you'll be back down the primary school.
Yeah.
So I've got one final question. We're coming towards the end, but well, I'm sorry, we're not going to get to all of the questions. So there was one very slightly technical question, which was, should we still press on with changing year ends to the 31st of March, 5th of April, to make it easier for April 24 clients, or is the Office of Tax Simplification going to change that with the year ends?
I'll tell you what I know and what I think, Andy, because I'm sort of fairly involved in some of that. And what I do know is that in order to change the tax year end, and whether you're going to change it 5 days or whether you're going to change it by 3 months and 5 days, it's the same issue. There are an incredible number of computer systems that government owns that have to be reprogrammed and rewritten. If you're going to do it, therefore, I think there's only any point doing it if you're going to December. But it is already, you know, there is a lot of belief that if that happens, it ain't going to happen tomorrow or next year or even in 2024. It is a long-term project, and I think that's a fair assumption of that. As to will I change year ends? Absolutely. I mean, most of mine are on March everywhere anyway. With that fixed reporting, so that everybody's reporting to the same quarter, although you can choose if it's the 5th of April or the 31st of March. But with that fixed quarters, it makes perfect sense to me to say, right, that 4 quarters, that's a set of accounts. I know that farmers and some other people, it's going to be a bit more challenging too, and it might not be possible. But for my clients, there's absolutely no sense in having any other dates. So that's what I'm going to do. And I, you know, most of my clients, they don't mind. I mean, if you really feel strongly about other quarters, you might say, well, all right, we'll incorporate them so we don't have to fret about it. But then corporation tax is going up, you know. It's sort of maybe not the best time to be going into limited company.
To do it.
So
cool. Thank you very much for that.
Yeah, that's my view.
Okay, so I think we're going to come to the end of time. We don't want to run over. Thank you very, very much, Rebecca. Thank you very much, Stephen. Thank you, Dean. It's been a fascinating session, and in particular the bombshells that we're dealing with. We will be following up on what Rebecca was saying about the changes, so that there's as much clarity as there can be. I don't think there are any particular conclusions from this, except for the fact that you need to start thinking about this now. You need to start thinking about your plans for your clients, what you're going to do with them, because it's going to be painful, but less painful if you start working on it now. Every firm is different. Every client base is different, but starting to work on it now is the point. And I think that's what we hope to achieve from this session. With that, I will leave you until the next time. Thank you for joining us. Goodbye.